Folks, in this kind of market, you need to trade the market that you have, not the one that you want. And this market has changed. Have no doubt about it. It has changed. So, this is my first best stock charts for the new trading year. And the last one I did was about 2 weeks ago. And what I was scanning for were high quality names that were leaders in their space, momentum names, Bollinger Band breakout type of plays where we did very, very well in 2025. But that's all changed. That's all changed. The game has changed. And what we did a few weeks ago in preparation for what we expected to be a rocky market in the new year was that we changed our strategy. We began to look for areas that had not yet performed, but that looked promising. Case in point, energy, uh, materials, not so much healthcare, but that is a sector that did well last week. And we've done very, very well. We were buying back our gold mining stocks, not this past week, but the prior week, and we're up on that trade. We we have multiple positions in energy stocks. We currently have a short position on XLE. Initially, we rode it up, then we saw it peter out, booked some profits on our options trading position, booked profits on the short puts that we had sold, and now we have a call spread of which we are now short of XLE for a very short term. We're going to look to close that out pretty quickly. I'm not betting on a crash in XLE, and in fact, I think that it's going up a lot higher in the coming months. What else is working for us are our value plays, hated stocks. Uh, Boeing. Boeing is one of our biggest positions at current, and we are up on it by about 10% since the end of the strike and since they hired their new CEO. And we're positioning in value plays because they've already been beaten up. Doesn't mean they can't move lower in a big stock market sell-off. Our focus right now is to minimize risk and to generate cash flow off of our positions. How do we do that? We sell options, we sell calls, we'll sell puts, we'll sell, whatever the case may be. If it looks right, we will sell premium. Case in point, Boyle, BOIL. We were buying Boyle. Nobody wanted it. We were buying it. Let's go to a daily chart. Back here in this range, I don't know the exact day. We bought it, then we sold covered calls expiring this coming Friday at the $55 strike price last week. They closed out Boyle at $64.82. So we made money on the common stock. We made money on the calls. And in expectation of having the shares called away from us at that $55 strike, I sold a put spread at around a $54 strike price, and that's working for us now. So this is how we're trading the market, okay? We're looking for areas of the market that are not loved. They're bottoming out. A lot of the damage has been done there. And we're avoiding and or shorting the areas of the market that have performed very, very well, yet interest rates are rising, and those names are coming under pressure. Case in point, we're short of Microsoft, MSFT. Microsoft is down so far on the new year. And it looks as though this is a monthly chart. We're putting in a rounding top on Microsoft. Also on a daily time frame, you have a head and shoulders setup. Left shoulder, head, right shoulder, and here's the neckline. And we broke it. We broke it on Friday. So what I suspect is going to happen here is that we are going to do what you call a check back. And we are going to try to recapture support. I think ultimately it is going to fail. I'm not going to add to my short position here because we do have earnings coming up, and I don't want to be heavily short of a stock or heavily long of a stock into earnings unless, of course, like Boeing, I'm long of it. Everybody hates the company. Everybody's expecting bad news. So I'll carry my position into earnings. So we're doing very well. We bought Gush, Gush. Again, nobody wanted it. We bought it back here, sold into strength. We bought it back here, sorry. Bought it back here, sold into strength. And I think that we are going to pull back here on Gush. This is a leveraged product putting you along the XLE. But I think ultimately what you're seeing here in this space is relative strength. And for anyone that knows my style of trade is that we are always looking for sectors that are seeing money flows, or what people sometimes call it sector rotation. Now you could see that Gush or XLE, the charts look the same by and large, and we are getting ready for a major breakout here on this name. And if you take a look at the Bollinger Bands in red trading inside the calendar channels, this is a monthly chart. I mean, this is setting up for a multi-year rally. And if you take a look at it on a weekly chart, we're still stuck in a trading range, but we're setting up for a big move on the energy names. What else did well last week were names such as XLV, healthcare. So healthcare was up on the week. We're still in a downtrend, but when you take a look at the volume was good, and we may be seeing healthcare begin to bottom out. Also, materials. Materials have been under pressure. Now on the week, they were down 2 weeks back to back. And I think we need to narrow down materials a little bit here to be more precise. Let's get away from simply being in materials to taking a look at another name we're along, EOG Resources. On the week, that was up. Also, gold mining stocks, NUGT, of which we own, that was up. So it's not a broad-based rally in the materials space, but folks, let's face it, we are seeing the CRB commodity index rally, and that means that inflation is on the rise. So these names are going to continue to do well into the new year. They did well last year, and they're going to continue to do well. Now, we're coming up to a couple of binary events, earnings. That can really move the market, of course. The market is priced for perfection. We'll be talking about the valuation of the market tomorrow night, Sunday Night Futures Live, 6 p.m. Eastern Standard Time. Join us there. And we have the inauguration. Now, I'm of the belief that they have set more landmines for this economy so that President Trump is mired down with having to deal with havoc after he takes office so that he can't push forward on his agenda. And on Friday, you saw the release of non-farm payrolls. Came out beautiful, like Nirvana-type jobs growth. The only problem is the ADP employment numbers, which came out earlier in the week, they certainly didn't validate that report. And we know over the past 4 years, when we get non-farm payrolls which come out, expect revisions to the prior read. So my guess is that non-farm payrolls for January are probably going to be a lot worse than what we got for the month of December. And for December, they're going to revise those numbers down. That will be the only way that we see bond yields begin to come back down again, because the Federal Reserve can't cut rates. It's impossible. And the fact that they are simply going to pause and not raise rates, well, that's going to allow for materials names to move up higher, because people are going to want to buy stuff that increases in value during an inflationary period. So this is a very dangerous market to be buying small caps, mid caps. Be very careful. If anything right now, those names are setting up as shorts. Why? Because bond yields are moving up. So what we're going to focus on today are 3 stocks, NVIDIA, LCRX, and Apple, as potential shorts, but not of the common stock. And the way we would short these names is by selling call spreads, meaning sell a deep out of the money call and buy a deeper out of the money call, and we collect the credit. So if the shares move down in value, well, that premium that we were paid decreases in value, and we're able to buy it back or let it expire worthless. So that's going to be the game plan with those three names. And the reason why they're on my watch list is because I was taking a look at TrendSpider's awesome tool here, Congressional Trading. And when you click on this, it shows you who's doing what in the Senate. And Senator Whitehouse has been selling NVIDIA shares, Apple shares, LCRX, that's Lam Research. Now this guy sits on all of these committees, has a lot of influence, and I typed into ChatGPT how his committee assignments impact these names. Being on the Finance Committee, he has influence on NVIDIA and Lam Research, Judiciary Committee, NVIDIA and Apple, and the Budget Committee, anything that has to do with semiconductors. So he knows something. And the funny part I saw here, I thought I'd share this with you, is that ChatGPT puts in this kind of like a disclaimer. While committee roles may expose members to general industry trends and economic forecasts, senators are bound by the Stock Act to prevent trading based upon non-public information obtained through their positions. That's hilarious, because all we've seen over the past 10 odd years are these monsters in Congress. And I don't know if this guy's a Republican or Democrat. Doesn't matter to me. These monsters in the Congress selling on inside information. And if we were to do it, we would go straight to jail. So I queried ChatGPT, when was the Stock Act passed? I thought it was something new. It was passed back in 2012, folks. So the hypocrisy is alive and well. However, we can profit off of this information. So for these three names, we'll be using congressional selling, as well as technical analysis, of course, and seasonality using TrendSpider. And folks, if you're not currently using TrendSpider, you're missing an arrow in your quiver. I mean, all of these tools to scan for high quality stocks or opportunities are at your disposal. All you need to do is click a button. Here, you want to do dividend capture, upcoming dividends. You'll know when the ex-dividend date is, where you need to be an owner of record, and you get paid the dividend even though you don't own the stock. You just need to be an owner of record at the time of the ex-dividend date, whatever that case may be. It's different for all stocks. So lots of functionality here, as well as the seasonality we'll be talking about in a moment, along with the monstrous value of having the automated technical analysis. So link below. At a bare minimum, you're going to get a 35% discount code. If you watch us on Twitter, link above, take advantage of it and help support the channel. And I will be doing demonstrations today of how we leverage the value of TrendSpider. In fact, I'm going to do a scan of the energy sector because I want to look for energy names that are setting up for long-term Bollinger Band squeeze breakouts. And let's do that right now. So we already have, I'm going to do 5 stocks, NVIDIA, LCRX, and Apple. And on NVIDIA, I'm going to show you a trade. If you stick around long enough, I'm going to show you an options trade where you can make nearly $3 for every $1 put at risk. Stick around. And if you're not currently a member to the Contrarian Trader, I've posted in the members area the week ahead commentary, which is our strategy session. That went out this morning. And for these names here, I will be posting entry points, stop loss points, and price targets in the members area. You need to be a member to gain access. head on over, use the link below, 14-day free trial offer. If you want silver and gold level membership, that's great because then you're going to get TrendSpider for free. So, link below, head on over to TrendSpider or head over to my website and check out our 14-day free trial offer. Let's get to it. Let's do some work here. Let's talk about doing a scan. And I want to scan for energy stocks using a Bollinger Band squeeze. If you sign up, I'll get this code over to you so you could use it right away. I'm going to change these time frames. I want to go with a monthly view of what is setting up on a monthly view with having a Bollinger Band squeeze. There may be nothing, but we may get something. So let's fish around because that's where the opportunity is going to be, whether we want to buy the stock or sell puts. That's a bullish play. Let's just go with energy across the board. And let's see what comes up. BTU, that's a good one. Peabody Energy. So again, I'll repeat this, and I won't repeat it again, I promise. But the Bollinger Bands in red, trading inside the calendar channels in green. What that implies is that you have a ton of energy being built up, pun intended. You have a ton of energy being built up, and you're going to get a breakout either to the upside or to the downside. I think that what you're seeing right here, right now on Peabody Energy is I think it's a liquidity hunt, meaning they're going to take the share prices down. They're going to blow out all the stops. They already broke through $20.52. You have another support level down here, 1762. It's right where they closed this last week. I think they're going to take this up. So I'm actually bullish on this stock, not bearish. I think that they are taking out all the stop loss orders. That way the institutions can buy on the cheap, because when they buy, it's like an elephant entering a bathtub. They just increase the share price. So they need to manipulate the market for these shares so they can get a big position. So BTU bullish on this stock. Let's take a look at seasonality. January is a great month, but the 2 months thereafter, February and March, going back, this is only 8 years. We need more data. There's got to be more data than 8 years here. There's not. That's very strange. Peabody Energy is older than 8 years old. They may have gone bankrupt. Here's the weekly view. So the next few weeks, it's a coin flip, which direction. So this is a choppy time of the year for Peabody Energy. So you don't want to get too big. But I would entertain beginning to build a position here on BTU. Now, EOG, this one I already know. EOG, we already own. We're going to be adding more to this. We have a Bollinger Band squeeze, and this sets up for an explosive move in the share price. And last week, the shares were up very, very nicely, up nearly 3.5% on the week, where the triple Qs, where you have your Mag 7 names, those are down 3.2%. So that's more than a 6% variance. Other names that look appealing, ExxonMobil, big name. It's down so far on the year. Not one of my favorites. Thurman Holdings, don't know them. Range Resources, great little Bollinger Band squeeze setting up here. And it looks as though this is getting ready to break out. Let's check out our seasonality. Let's go back to the month. And for the next 3 months, January, February, March, we rise sequentially going back 32 years on this stock. This is very attractive to me. So Range Resources, long-term consolidation, Bollinger Band squeeze, seasonality, looking really good. So the two other names I like are to the long side, BTU and Range Resources. What else do we have that's looking good here? Let's just scroll through these quickly, see what else jumps out. We did Peabody already. Calumet, I don't know this company, but it's already beginning to move up higher, looking good. California Resources, I don't want anything to do with California. DMLP, Dorchester Minerals, interesting. Nice tight consolidation, Bollinger Band squeeze, looking good. Epsilon Energy already beginning to break out. EQT has already broken out. Expand Energy has already begun to break out. Kimball Royalty Partners, very tight Bollinger Band squeeze here. Those pipeline companies pay huge dividends. We have MGY Magnolia Oil and Gas, very tight Bollinger Band squeeze setting up here. NCS Multi-Stage Holdings, it's already begun to break out. So you see my point here, folks, is that this is where the money's flowing. Healthcare, certain materials plays, and energy. Right? So if you're thinking about going into the new trading week, buying NVIDIA or the SMH on this so-called dip, I think it's the wrong play. I think you're going to get hurt. With yields continuing to press up higher, along with the yield curve steepening, this is a market where you must be diversified. And when I say diversified, I'm not talking about having $1 in the banks, $2 in the semiconductor names, and a couple of bucks in whatever other stock sector there is out there. Let's take a look at how you have done with diversification last week on a model portfolio, XLF, on the week. That was down 3%. XLY, discretionary names, that was down 3.33%. The semiconductor space, that was down 4.462%. So what would diversification into different sectors of the stock market have gotten you? It would have gotten you lost money. You need to look for where money's rotating into. And as much as I dislike Kramer, he does have a great saying, there's always a bull market somewhere. And that's true. And there's one developing in energy. There's another one developing or has already developed in materials, but in only certain sectors. So if you're new to trading, you're looking for opportunities where nobody else is looking, you're certainly not going to hear about it on CNBC. Sign up for the 14-day free trial offer. Give us a shot. Cancel at any time. And you get a 14-day free trial offer. Now let's talk about LCRX, Lam Research. This is a sector that is under distribution. So what does that mean? We're putting in lower highs and lower lows. So to me, I'm looking at this chart and I'm saying interest rates are rising. That's bearish for Lam Research. We have a senator out there that is selling his stock. We have the technicals of the company not looking good. I mean, if we break down below 69.37, we're going a lot lower, probably coming down to around 57.22 per share. So bearish key reversal bar on the week last week. To me, this looks like a short all day long. But do I want to sell the shares short? I would do it, but not into earnings. I would rather sell a call spread. Again, that's selling a deep out of the money call option, but simultaneously buying a deeper out of the money option. That way you reduce the buying power to put that trade on, and plus it acts as an insurance policy, just in case the trade goes against you. So LCRX looking interesting. And folks, I think I kept saying LCRX is the symbol. It's LRCX. I wrote it down wrong. My apologies. Nothing like embarrassing yourself in front of the world. LRCX. Okay, that's correct. So what we want to do here is we want to look at when earnings are. And they come out on the 29th. This is not attractive to me to short, because I don't want to be short of this stock into earnings. When we sell premium, I like to go out no more than 45 days and no less than 30 days. So this is eligible for us to trade. Great company. At some point in time, this may be a buy. ROE on this company is 47.7%. That's outstanding. But this is not for us right now to trade options. Perhaps a small position selling short the common stock on a continuation breakdown week over week. That would be an interesting play. I will be putting the entry point, stop point, and price target in on that trade in the members area. So please, members, go check that out later on today. Now, the next play that we're going to be looking at, again, these are the three stocks, LRCX, NVIDIA, and Apple, that we have a senator very active in the market, and he appears to be pretty accurate in his selling here. He sold on the 19th of December. I think that he would be proven to be right. Technically, right now, he's wrong, but I think he's going to be proven to be right. I think these shares move lower. The next chart that we're going to want to talk about is Apple. Now, Apple, their earnings are definitely coming up very, very soon. The report date, I shouldn't say when he sold, the report date of when he sold the stock was on January the 3rd, right here. So good timing by the good and honorable Senator White House. It appears as though he still owns some stock. He's completely out of LRCX. I don't know why I keep doing that. Now, Apple, weekly chart, bounced off of support. I would not be shorting this now. I would be looking to sell a call spread after earnings and on a rally. I would not be selling call spreads into weakness. That's not, you don't want to do that. So on any rally up and into resistance, and I'll be putting out the price target for when we want to sell those that premium in the members area. So members, check that out later on. I think that we may be getting a pop here on Apple. This is a 4-hour chart. We closed off the lows of the session. We bounced off of support. They may try to rally this on Monday, but I would be fading any rally here. I haven't liked Apple for quite some time. They haven't had a gangbuster product in I don't know how long. So I think this company is going to be facing a rough 2025. So on any rally, ideally after earnings, we will be looking to short Apple. Now, the last trade that I like, and the reason why I like it, is that earnings are not for a while. And I could sell a spread here, meaning a call spread, and I could risk $1 and potentially make almost $3. So they don't report until the 26th of February. That's good. So when I take a look at this chart of NVIDIA, let's go to the weekly chart. This is a massive bearish reversal bar, a rejection of a breakout. And in fact, last week, what was the high of the week? 152.89. We made new all-time highs last week, and it failed. It failed. So the play here is to sell a call spread. Again, to repeat, a call spread is when you sell a deep out of the money, ideally a 20 delta call option, and then buy, say, a 15 call delta, and that acts as an insurance policy, reduces your risk, and you collect the premium, and you're not net short. If you're wrong, you still have an 80% probability of making money. That's why I like the strategy, and that's what we've been doing a lot of. So the trade I like here on NVIDIA, and I'll share this with everybody, is going out to, when do they report earnings? On the 29th? 26th. All right, so these options expire on the 28th. So we would need to close out this trade before earnings. And what we could do here is sell the 162.50. I have this trade already set up. Sell the 162.50 put, and then simultaneously buy the 165 contract. So here's your risk. Say you're doing 10 contracts. So I'm risking max loss $650, max profit $1,850, $1,850 on 10 contracts. I like that. It doesn't draw down my buying power all too much, and I think it's an attractive risk to reward trade. And when I enter these trades, I will be sending out alerts to our members. I send out those alerts when we enter a trade, add to the trade, or exit the trade. And let's take a look at a daily chart here on the video. Yeah, this is not looking good. So I like the strategy we've got set up here, and we'll be looking to shorten NVIDIA in short order, especially if bond yields continue up higher. So if you want these alerts, you want my commentary as to what I'm thinking about the market and the opportunities that are out there, sign up for the 14-day free trial offer and sign up for the silver and gold level membership. Get TrendSpider for free. All the functionality you see that I have right here, right now, is the same exact thing as members have. If you're not ready to sign up yet, that's fine. At least take advantage of a minimum 35% discount off of TrendSpider. Use that link below on YouTube, the link above on Twitter, and sign up for TrendSpider. Start the new year off with an edge, and TrendSpider will help give you that edge, right? Lots of information. In fact, I laughed about this earlier. I realized that they just added the Pelosi tracker. You have websites that are looking to charge big bucks to have this information. You get it included. It's a no-brainer. So tons of functionality here. Leave a comment below, like, subscribe. You know the deal. Everybody have a profitable 2025 and an amazing weekend. I'll talk to you soon. Be well. Don't forget, Sunday Night Futures Live, 6 p.m. Eastern Standard Time. I'll see you there.